How's it going? Ernie here, and this is 0 Days to Expiration, the 0 Days to Expiration podcast. And today we're going to talk about exiting trades, the good, the bad. I know you wanted me to say the ugly, but no, I'm going to talk about the reality, the real situation. Because a lot of people ask me, Ernie, how do I know when to exit? How do I know when I have enough? What's enough? Or then there's the complaint. I couldn't get out. I hear that a lot. I couldn't get out of my trade. So when I hear that, the first thing that I think is, okay, we are trading the S&P, albeit options on the S&P, on either the futures or the SPX, the index. But one of the most liquid assets in the world, and they can't get out of their trade. Now, it's not because they can't. And I'm going to stick the reality right in people's face. You can't get out of a trade, not because you cannot. In other words, not because you are physically unable to get out of it. It's because you don't know how or why, or you just don't want to. Let me put it another way. The market isn't giving you the price that you want. That's what it really comes down to for most people. They have an expectation. They have an idea in their head about what profit they want to make. And the market came up and it hit that, went right to that price, but it didn't, their limit order didn't fill. And they say the market wouldn't give me my price. It's okay. The market wouldn't give you your price. That's a true statement. The market decided it wouldn't give you your price, but it hit it over and over. Well, then apparently that's not what the market was saying was its price. Think about that. Just because the market comes up to your limit order and hits it, there's no guarantee that now, and when I say hits it, you're looking on the chart and you see, oh, that's the closing price or whatever that price is that the actual asking price? Are you giving an appropriate offer? You got to remember that every price comes with a bid and an ask, a spread. And on the S&P, that spread is pretty tight. Even if you're trading something like a butterfly, which generally has a much wider spread because you have to satisfy the needs of 4 separate contracts all at once. But for the most part, you can get in and out of any butterfly just about any time of the day, whether it's during the market, cash hours, or late at night, within, say, 25 or 30 cents of whatever price that you chose. So in other words, if the price is right there at, I don't know, let's say it's at 37.74. There's the market right there. Your limit says, hey, I should be making $1.25 here. Because that's what it's saying. It's saying that my spread is worth $1.25. How come I'm not getting out? Well, that's not the price that the market wants. The market doesn't give a damn what you want. So the spread is something else. The offering price is something different than what you have. So generally what I've found is, from a technique point of view, I'm going to talk about this in 2 different ways. First of all, we're going to talk about technique, right? Technique is fairly simple. If it's not giving you your price, that doesn't mean that you cannot get out. As a matter of fact, you should be able to get out at any price. It doesn't matter. But let's say that your need is to get out. Now, you have to ask yourself, is your need to get out at that price or just to get out? And because if you got out of any price within, say, 25, 30, 40 cents, you're going to be in profit. All right. So that should be the real thing that you're asking. That should be your real intent. Well, what am I willing to take? Am I willing to take that, or am I willing to chance not taking that price and then perhaps never ever coming back to that price and maybe even going to a max loss because I was unwilling to take that price or whatever price the market was offering? So you have to decide, am I willing to go to a max loss and give up that price? whatever that price happens to be, or will I take what the market wants to give me? Now, the technique of getting in and out is relatively simple. We call this cancel and replace. Everybody knows about cancel and replace. Now, generally, cancel and replace is fairly automatic, and with the S&P, options on the S&P or the futures or the SPX during a cash market, if the natural price is something, you should be able to alter your price 5 or 10 cents at most, and you'll get a fill. Sometimes there might be a particular situation, a binary event happened, or volatility has suddenly dropped because after an event, or something else happened and price starts to move. And so you have a different situation, but that is the minority of cases. The vast majority of cases are that it's in the middle of the day, price is relatively stable, it's not moving a whole lot. It might be, charging up or charging down, but it's doing it in an orderly fashion. And you should be able to choose a price that's either 5% above or 5 cents above, 10 cents above, or 5 cents below, or 10 cents below, and be able to easily get out. No problem. 80% of the time, automatic. A lot of times when you choose that natural price, you just wait a couple of minutes and it will hit it. And so what is happening is it's not actually hitting your price. The market may be going a little bit beyond it to its asking price and then hit it, right? So it's not really your price. It's still the market's price. You might think, well, I got my price last time. No, you got the price that the market was willing to give you. Now, if it's one of those other cases where the market is moving or there's a change in volatility can do a lot. When volatility drops suddenly, if you get a volatility crush, you could have a lack of liquidity. And so then the bid-ask spread starts widening. And that's because there aren't any other counterparties out there that are willing to trade with you at that price, right? So you have to find where they are. Are they a little bit above me, a little bit below? It's changed. The situation's changed. You've entered a frothy area. And so now you need to accept that. And if that happens, again, it's the minority of situations. You have to accept that and then employ maybe a slightly different tactic. So instead of doing, say, 5 or 10 cent increments, maybe you do 10 or 15 or 10 and 20 cent increments to get in or out of the position. Now, depending on your platform, you may have a lot of profit in there. Some, like for instance, with Thinkorswim, if you're over $5 of gain or $5 of value of your spread, you can't get out at just any price. It has to be in increments of 25 cents. So then it makes it real easy to get a price because 25 cents is more than enough spread to be able to get a limit order in and then get a price. Usually you should be able to do it within 5 cents. But if you're over that particular limit and the value of your contract is more than $5, the platform actually limits you to choosing things that are in increments of 25 cents. So for instance, let's say you have $5 of profit and now the price is at $5.20. You can't put in $5.20. You either have to put in $5 or $5.25 and then hope that it comes up high enough to be able to hit your 25 cents. If you did $5, then you'd probably get filled right away. If it was anywhere from $5.05 to $5.20 and you put $5 in, you'd probably get hit right away. So those are some of the mechanics, the tactics that you employ to get in. It's just techniques, and you need to become skilled in that execution. That's the easy part. The hard part is what we were talking about before. Your price. Your price. The market doesn't give a damn what your price is. And you may be looking at your platform and saying, well, it's hitting my price and it's not filling. Well, no, it's not, because it's not hitting your price. Because if it were hitting that price, and if the market decided that was its price, then it would fill. So then you have to, come to grips with yourself and say, well, what is my objective? Is my objective to get that price or bust? or go for something different or get what the market is willing to give me. And that's an attitude thing. Having the right attitude makes all the difference in the world when you realize that it's not about you, it's about the market. The market, you could look at the market and say, well, the market must have been wrong, or that price is just not, shouldn't be there. It should be up here. So here's a undeniable truth. No matter what happens in the market, whether there's manipulation or not, or an event or not, or just the random noise that happens, whatever the price of the market is, that is the truth, the absolute truth. You cannot deny it because that's it. It's not going to give you anything different. You cannot alter the truth. So you have to accept the truth that you are nothing, the market is everything, and you have the incredible privilege of taking a profit, whatever the market decides to give you. Think about this. The fact that you can be a trader and you can manipulate some software to put yourself into a position where you can turn your money, the risk that, or the money that you put up at risk, and then generate some more money is a really incredible thing. Because what are you really doing for the betterment of mankind or in producing something? You're not producing anything. You are doing something that is akin to just being a leech off of a system. Someone who is sort of plugging into a stream of activity and trying to suck out some juice out of it. That's what you're doing. You're not providing, well, I guess you could make the argument that because you are providing some liquidity that you're injecting, you're doing your part to get the wheels of capitalism in motion, which is a lot of bullshit. You're not doing anything. You're in a very privileged position to be able to go in there and extract money from this stream. There should be a kind of reverence for that, right? That you're given that privilege and that you're able to actually extract a profit out of there without actually putting in any productive value. Again, I guess you could say, well, I bought this software, or I pay for this service, and I'm employing all these people through my activity, or I'm doing my part. Sure. But they're all in business because they know that you're a gambler and that they can extract a lot of profit out of you for an activity that they know that there's a very low likelihood that you're going to win. And so they are playing the system too. It's kind of like, being a trader is kind of like being a professional athlete, that you can actually get paid for doing something that's fun. Well, some of us find this fun. Others find this tedious, hard. And then you have to make a decision. So that gets me to another point about what is it that you're trading. So there are two decisions that you have in front of you when you're confronted with a strategy or a way of taking money out of the market, right? Stealing money, being a leech onto the system and extracting some profit. And you have to find out whether or not your your mentality, your attitude is in alignment with whatever strategy that you're using. Is it right for you? Because if it doesn't comport to your way of thinking or your values or your underlying beliefs, then it's going to be very difficult for you to extract that money. If you don't believe in what you're doing, it's going to be difficult. So I guess you have two choices when you're confronted with a strategy. You could decide that, well, that strategy just doesn't align with my way of living or my attitude or whatever. It doesn't meet my Myers-Briggs evaluation of what type of person I am. Or you learn how to work with the system and realize that nothing comes for free and that you have to work at it in order to figure out how to adjust your attitude to what the market is willing to give you under that particular strategy or system or whatever it is. I would say that's probably the easiest way to go, because if you were to take the other attitude, that you're going to look for a system that would perfectly align with your attitude, your mentality, your way, you're going to be jumping from place to place to place, strategy to strategy, taking this indicator, that indicator, listening to this jamoke or that jamoke, and you're never going to get anywhere. So more than likely, the best solution is to align yourself with what's in front of you. That's not the easiest thing to do, and this is all that reality part. The good and the bad, those are things like good beats, bad beats. The luck. You get into a market, and sometimes you're going to have things go your way, and your strategy works, and other times it doesn't. Hopefully, it works enough, and that your risk management is such that, regardless of whether it's a good day or a bad day, you've put in the right proper effort, and in the long run, you can extract some value from the market. The reality is that in order to be there and be able to put on good trades, whether it's a good market or a bad market, or a good situation or a bad situation, you need to be of the right mindset. And that will go a long way to ensuring your success in this market. Now, of course, having a strategy that makes sense, that has at least some edge and has some positive long-term outcome, will make a difference. It will certainly make it easier for you. And there are some strategies that do make it easier for people, but sometimes it doesn't matter what it is. Some people are just so uptight, so nervous about everything that they do, that they cannot put themselves in the right mindset in order to be able to perform the simplest of tasks. And that is push a button. All you got to do is push that button. So getting into that right attitude is extremely important. A lot of people say that traders are the worst kind of people. Right? Going back to what I said before and alluded to, that a trader really is nothing more than a leech on a system. But that's not true. Because when you're coming, all of you, everybody is a good person in some way. Well, most people. What you put into something is going to be typically reflective of what you'll get out of it. So when you're engaged in trading, yes, you're not engaging in anything that's going to solve world hunger, or bring peace across the world, or do anything productive other than try to extract something out of there. Trading is a direct reflection upon you and how you approach that game, and how you can, understand the system and what it is that you're there to do. That you're in a very privileged position, to be able to extract money out of a system from somebody else, because you're able to use your mental facilities and your timing, your execution, your muscle memory, all the things that you've learned, and you have that confidence. It is a direct reflection upon your particular mental state, because that's really what it comes down to. Sure, you can have, a good strategy that has, like I said, has edge, positive long-term outcome. But unless you have the right attitude, and that's what I was talking about right from the very beginning, the realization that the market isn't there to give you anything. You're there to take, right? But you can't just take what you want. You have to take what is given to you. And in doing that, you have to have the right mindset. You have to have a clear mind. You have to be confident in what you're doing. You need to be ready. You need to have some level of experience and some muscle memory, some good habits. Come into this with the greatest and utmost concentration. And all of that will depend upon how you treat yourself, because when you're actually in the game and you're trying to perform, that is reflective about everything that you have done prior to getting up to the plate, or on the mound, or whatever analogy that you want to use. When you're in the show, when you're there and how you perform is 100% reflective of what type of person you are prior to getting there. You don't change personalities when you become a trader. You're carrying with you all of the baggage and the experience and the mindset that you are as a regular person. And if you're a nervous Nelly, or if you've got a lot of baggage in up here, it's going to be very difficult for you to concentrate to extract profit from that stream that you are privileged to attempt to get, that you have no real right to it. Well, I don't know if that's the proper word, unless you are of the right mind, because it's not going to give it to anybody. Keep in mind that there are literally millions of other people, including some very, very smart people, a lot smarter than you, as well as systems with artificial intelligence that are way smarter than you. And you're competing against that to try to make a living. That's a heady task. And it means that you need to come to that situation the best possible person that you can be. There isn't any one particular type that wins in this game either. You know, all different types of personality types, but there are certain characteristics that are constant across all the different personality types. You need to be able to have focus, mental clarity, and not break under pressure. You have to have a realization for what you're there for, and that the market is the truth. And you have to accept that truth. So we can go into, you know, all kinds of things that you can do to prepare yourself, but that is the ultimate reality, that when you're coming to the market and you want to extract profit, you want to exit with some money, it all comes down to that acceptance that the market isn't there to serve you. It will give you what you want, and you should be grateful for it. So there you go. That is the reality. You heard the good, the bad, and now the reality. I'll get into this in more detail in future episodes, but thank you very much. Peace to you all. Hope this helps. Take care.